Hi, Cousin Marv Eisen here. We're looking at the chart of the S&P Emini in 5-minute candles on June 11th during normal trading hours of 9:30 to 4 p.m. Eastern. Looking back on any daily chart, it's easy to see where we should have entered and where we should have gotten out. But without the benefit of being able to look back, it's not so simple. Let's go back in time to just before the market opens on June 11th and see how to determine where we should enter and what the market signals are telling us. Looking at the big picture of June 11th, right from the start, the market showed us that it was headed downhill for the day. Now, that couldn't have been determined certainly from this candle, or this candle. But as we can see, prices are tending downward. If you sold your position, if you went short right at the open of the day at 9:30, prices would have run away from you for a bit, but then you would have recovered and you could have sold your position during the next 20 minutes for a 6-point profit. Through the rest of the day, the market headed down, and none of the signals at the stochastic lows were really giving us information that was reliable looking in hindsight. But there was something in the morning news that gave a hint as to what the trading day would be. Like all other traders, you watch the morning news, you read the morning headlines to get an idea of your opinions of the market head direction for that day. One of the pieces of news was that Goldman Sachs came out with an announcement that the Federal Reserve would not be lowering interest rates for the rest of the year. That was the cause of yesterday's market decline. That one piece of news alone contributed to this. The stock market has been headed upwards based on whether tariffs are going to be imposed or they're not going to be imposed, but always with the inclination, based on statements from the Federal Reserve, that the Fed would maintain interest rates to keep the economy moving, which means lowering interest rates. If the Fed lowers interest rates, of course, the stock market loves that, so it means the market goes up. But when Goldman Sachs came out with their announcement that the Fed would not be lowering interest rates for the rest of the year, that took the support out from the market, and that alone, that announcement, contributed to this. So anyway, that's the read for June 11th, the big picture, and I'll see you on the recap on June 12th. Have a great day. Marv Eisen, Timeless Dollar.